Welcome to the Real P&L Trading Show. Every week, I share my real accounts, each tied to a specific trading system, so you can see exactly how each strategy performs in real time. And I also share my safe wheel strategy for free here. So let's get into it. You guys let me know in the comments that all my tech is working. Will says the audio is good. Thank you, Will. Appreciate that. So also be sure to post any questions you might have. Post them earlier rather than later so I can get to them. Sometimes I don't get to the questions because they come kind of at the very end. All right, let's talk about the earnings edge. What's going on with that? Here's my earnings edge account right here. As you can see that I'm up $15,488. I started with just over $6,000 this year with my new earnings edge 3.0 system. You can see my net lick here is 20,539. Let's put that in the spreadsheet so it makes a little sense. 20,539. So you can see I'm up from last week. What is SPY trading? SPY is trading at 644.26. Oh, pretty much the same as last week. And you can see what the earnings edge is done. Last week, I traded NVIDIA, and NVIDIA was down pretty good, but then it recovered, and I took a small profit, $252. And you can see my record is 17 wins, 2 losses. And this is since the 3.0 version in 2025. And I'm up, my win rate's about 89%. I don't expect it to stay that high. But I've got my average win here of $1,013 and my average loss of only $874. And you can see what the earnings edge did in 2022, where it outperformed the market. It did 63%. The market was down about 20. In 2023, the market was up 24. The earnings edge was up 17. In 2024, the earnings edge was down 36%. The market was up 23%. And in 2025, the earnings edge is up 239%. And the S&P is up about 10%. So the earnings edge is up 300 since inception. The earnings edge is up 310%. The market's up 35%. On a risk-adjusted basis, this could be a little bit subjective, how much risk I'm taking. But on a risk-adjusted basis, I would say that the earnings edge is up about 124% versus 35% on the S&P. So not quite that 310% because it is more risky than just holding the S&P 500. All right, so that is the earnings edge. Let's talk about the PL5 Pro. PL5 Pro had $424,000 in it last week. Let's see what it has in it this week. Let's get to that particular account. 427,775. 427,775. Okay, so you can see the PL5 Pro, what it's done in 2025, down about 8.69%. It's underperforming, and the market's up about 10%. But of the last 6 months, since July 19th, 2024, and that's when I started trading it live. I mean, I've traded it before that, not live. That did fine, did really good. But anyways, I'm only going to show you the numbers of when I started sharing it live. I'm not going to talk about what happened in the past when you weren't able to see the results. So the last 6 months of 2024, up 16%. The market was up 6.65. So you can see overall, the PL5 Pro is up about 6%. The market's up about 17% since mid-July of last year. And on a risk-adjusted basis, the PL5 Pro is up about 12%, and the market, obviously, 17.35. So underperforming a little bit here. I don't think that will resume. I think that the PL5 Pro is going to go ahead and come in and pass the market up on a risk-adjusted basis. I don't see any issues with that happening. The PL5. Now, this is the account where it's pretty much a variant of the PL5 Pro, and I trade this with a smaller account. And because I trade with a smaller account, the commissions are pretty heavy. So I account into IB, Interactive Brokers, for better commission rate. I can't show you the whole screen or else it'll show my account number. So it's the amount is 33,791. It's up from last week, 33,791. And by the way, every month I'll show my actual equity curve, so you know I'm not adding money to the account, to change the net liquidation values. Now on the PL5, this one I also started mid-July of 2024, and the last 6 months of 2024 was up 10.2%. The market was up around 4%. This year in 2025, the PL5 is up 2.19, and the market's up 10. And overall, the PL5 is up 12.64% since inception, market up 14.38. And on a risk-adjusted basis, these are pretty much the same. Um, there's no, the drawdowns aren't half; they're about equal to the S&P. So on a risk-adjusted basis, you can see we're just barely underperforming by 1.5, 2%. So we're right there on the S&P 500. Most money managers, they can't come close to under to outperforming the S&P 500. They just can't do it. Okay, let's talk about the safe wheel. What's going on with the safe wheel? Let's look at the account. The account is one. So this has 55.54 net liquidation value. That's what's important. 55.54, so up a little bit from last week. And you can see that the safe whale is underperforming this year, up 1.35, market's up 10. And on a risk adjusted basis, underperforming a little bit here. One thing I like about the safe wheel, I mean, it can outperform the market, especially the market's going down or sideways. But the thing is, if you really want to learn how to trade options with very little risk, this is a really great system to use. And I was thinking about, how to help people the most. And, obviously paper trade, right? But I can't paper trade. I get bored and I don't pay attention and I don't care. And so I've got to trade with real money. And so this is a great system to use if you want to trade with real money and you want to learn how to trade options and you don't want to take a lot of risk. It's just really great for that. And I'm just wondering and ask you guys, can you guys paper trade and actually stay with it? Or do you get bored and just stop and you just don't really, I can't really learn paper trading. I'm wondering if you guys, can you learn paper trading with paper trading? Let me know in the comments here. All right, so looking at this overall, you could see in 2022, when the market was down, the safe whale outperformed by about 40%. And then when the market 2023 went up significantly, the safe whale underperformed 5% to 24%. And in 2024, the market was up 23 and the safe whale was down 14. That's pretty rare for the safe whale to be down that much, but that's the maximum drawdown. And then the 2025, you can see that the market's up 10 and the safe whale's up 1.35. So overall, safe whale up 11 and the S&P up 35 since inception. That is January of 2022 on a risk adjusted basis. Because you have about half the drawdowns with the safe wheel on a risk adjusted basis, you're at 22% versus 35%. So you're still underperforming. But the main thing here is you're learning and you will outperform at times the S&P. I was outperforming for a while, but even then, it's a great tool to learn. And it's hard for me to paper trade. Maybe other people like paper trading and it works for them. I don't know. It doesn't work for me. Okay, let me actually trade now the safe wheel. I'm going to actually trade it live. I've made every trade here live on YouTube except for the long calls that I buy. I spend $5 every week buying long calls. Take that out of the equation, which is pretty easy and straightforward. Take that out. I've made every single trade live on YouTube here. So I'm trading JD. Let's take a look at what my positions are. I can see that I own 100 shares. I bought it at 33, so I was assigned at $33. And I've got a couple hedges in place. So my first question here is, are these hedges, valid? Are they good? And I have 3 questions about this hedge right here where I'm long 3. There's 3 questions about this put hedge. Number 1, do I own 200 shares and should I cash it in? I don't own 200 shares, so the answer is no. Number 2, am I under 100 days? Because if I am, I'm depreciating too fast. The answer is no. And then the other question is my strike price close enough to the money? Is it within 70%? So that would be, let me get my calculator over here. So my strike price is, it's a $25 put, so it's 25, and it's trading around 32.15. So how close am I in a percentage basis? This whole system is based on percentages, by the way. I'm 77% away, which is close enough. If I was 69% or lower, I would have to move this put hedge closer to the money, but I don't have to. So all 3 questions are no, this is a good. And then of course I have my call where I paid 5 cents for it last Friday. It's the 35.50 call. I have this particular hedge just to protect actually this put hedge here in case JD gets a takeover bid or something crazy like that. I'll be fine. And of course I own 100 shares. So now that my hedges are in place, I want to run the traditional wheel. What do? Well, I own 100 shares. I want to sell a covered call, and I want to make sure that my strike price is 33 or higher because I don't want to get assigned below 33 and take a loss on the shares. So I'm going to look at the calls and see if at the 33 strike or higher, I can sell premium. What do I sell that premium for? At least around 32 cents. I might get, maybe a little less, 31 cents, 30 cents is probably okay, but around that 32-cent mark. So let's take a look at and I'm going to do it in the nearest expiration because this is where you get the most juice for your money. So at the 33 strike, can't quite get enough premium there, right? I want to get around 32 cents and I can only get around 27 cents. I can't get enough premium. I don't want to sell a covered call because there's not enough premium for me. So what am I going to do? I'm going to basically martingale. In other words, I'm going to double down on my position and I'm going to go ahead and sell another put. I'm going to sell it out of the money, but I want to get at least 32 cents. So it looks like I'm going to go to the 32. I can't sell the 31.50, not enough premium there. So I'm going to sell the 32. I'm going to sell 32 put, and it's trading mid price is 45. Maybe I can get that. And this will expire at the end of the week. Okay, so I did get that. So this expires at the end of the week, so I'm going to keep this $45. So I'm ABC, always be collecting. So that is the simple way to do this. Now this thing's all sized out perfectly too. So if you have between $5,000 and $10,000, you want to trade a stock between $20 and $40, and you want to trade 3 put hedges and 1 contract with the wheel. If you have 10 to 15,000, you would double it up. So you do 6 put hedges and 2 contracts with the wheel. Make sure the stock is between $20 and $40, and I use margin. That way I never run out of buying power or anything like that. So I have it all sized up just right. In fact, I also have a flow chart that'll tell you exactly what to do in each scenario. Every situation is covered, and I'm actually giving that for a limited time here. I'm actually giving that away free. So the safe wheel you can get for free right now. So I would grab that. There's a link in the description. All right, so let's see if you guys have any questions or comments. Let me take a look at questions and comments for today. All right. Will says the audio is good. I appreciate that, Will. That helps me. Mad Mike says, hit that like button. I'd appreciate that. If you are interested in other people sharing their P&L and net liquidation, there's a couple ways we can do this. In the description of this video is a little something you can copy and paste where you can ask people, other instructors about P&L and for their specific P&L if you kind of hone down into the questions, but you can just copy and paste it into their comment section and just see how they respond. It'd be interesting to see how other instructors respond when you ask them for the P&L. I think you should share if you're selling a course and you're teaching people how to trade, I believe that you should be profitable And I also believe you should provide a track record that proves that you're profitable. And if you also believe the same, then hit that like button for me so we can spread the word together. Okay. Albacore says all's good. In other words, the tech is working. Devin says the audio is good. Thor says the earnings edge is looking good. Yeah, it is really looking good. This 3.0 system, uh, we developed. Actually, my daughter helped me develop it. This particular tweak to the program, Avery did, and she came out with a great idea, and then we back tested it, and it's working really well, especially this year in 2025. You can see that I've more than tripled my accounts to turn $6,000 into over 20,000. Kevin, good morning. Will, any opinion on the U.S. Intel deal? U.S. took 10% Intel stake. What? I don't pay much attention to the news. Are you saying that the United States owns part of Intel? I don't I don't know about that. I don't think that's I don't know. That's interesting. I haven't had time to think about it. My first thought is the government should not get involved that deeply into business. Okay. Thor, always good when the government backstops your investment. I guess you can look at it that way. I guess they're never going out of business. What did that stock do? It probably flew higher. I mean, since there's no risk anymore. Albacore says IXN. I'm not sure what that means. Thor is with me on the paper trading thing. It's too boring. I can't stay with it. I get bored. I just do something else and I lose track and I can't learn that way. Albacore says I have not paper traded. Yeah, I have paper traded, but then I just lose track of it. Will says I don't paper trade, but eventually it gets bored. You get bored, and then I use Toss Wayback Machine to just play it out. Yeah, back testing. It's always the way to go. Less more says I tried paper trading and have the same struggles. I just go live with minimal capital. Right. It's better to just that's what I think too. Just trade super small. That way you'll pay attention. Avery says hit the like button. Less is more. Since you started trading JD this go around, how much are you up? I don't know. Let's see. JD. Break even. I'm at break even with JD. Basically up $3. Will, my IQ is too low and I can't do the back testing the way Carl does. So you just use the toss time machine feature. I'm a bit boomer minded. Yeah, I use OptionNet Explorer. I like that tool. Works really well. It's a little laborious if you do it manually, that's the only way to do it. But man, you get really good numbers, you get really good understanding. It's just really well. It's really good. Will says, Carl, I fail as a student of your fundamentals. Yeah, I'm not really a fundamentalist, right? A story behind the stock. I always like playing the news. I'm trying to figure out what to do with Roblox and Cracker Barrel. Yeah, I don't. You told me something I didn't know. Like, I don't pay attention to the news because I'm a quantitative trader. Everything I do is based on statistics, and the news doesn't matter to me. That helps, though, right? Then I don't have to worry about the news. Send a second wave of troops. I'm not sure what you're referring to there. Oh, maybe you're referring to your stock might be down. So even though the bid ask was 44.46, I was able to get filled at 46 cents. Maybe try initial trade 1 penny above. Yeah, I probably got a little bit of a bad fill. I probably could have got another dollar, but because I'm live and everything like that, I just want to get it filled. Will says, Carl, in this position of the safe wheel, I always look at the risk graph to see my downward projection is just too weak and end up buying a $5 put instead. Yeah, I think that's not a bad idea at all. I just don't want to make that part of the rules because then it gets really complicated. But let's see here. Yeah, where are we living here? We're at 32. We're here. Now this says I'm down 220 because it doesn't take into account all the premium that I've sold in this position. But yeah, you can see that the safe wheel, just like the traditional wheel, is could be construed as basically a long strategy. Yes. But you have to understand that the volatility increases, and so did the price of options, and so those long three put hedges, when the volatility increases, those are also going to increase, and so it'll probably raise this T+0 line up a little bit if we have like a major market meltdown. So you always got to take that into consideration too. James Grimsley, I've been thinking about your options build. Why not open with 2 long puts as long as you have one position, and then add the other put as you open the second position? Uh, so in other words, I would be long 300 shares at some point, possibly at some point in the future. I'd get long 300 shares, right? On using this now, the 3 put hedges aren't necessarily going to protect the 3 long 300 shares. They will when you get into the money, but because we're out of the money, those 3 aren't really going to protect you until you get to that strike price. For example, I'd be at the 25 strike price. So between the 32 and the 25 strike, I'm going to be taking a pretty heavy hit if I have 300 shares because, like I said, the put hedge would not be in the money. So there would be a larger loss doing it that way. Of course, I would collect more premium too, but I try to make it a lot. I try to, look at risk first and then profits next. So that's the reason why I wouldn't go with 300, short 300, and then only have 3 put hedges. Oleg, good morning. Randy says, when did you start the 3.0? So the 3.0 is, you're talking about the earnings edge. I literally started that in 2025. So if you see any 2024 results, that was not the 3.0, all 2025. Every single 2025 trade is a 3.0. Thor says the investment in Intel is real. Yeah, I mean, the government's going to back it up, and I'm sure they're going to go get money from the Fed to bail them out. So it's kind of got a floor on that one. Ed says, Carl, can you describe what you do this Friday for the safe wheel? Sure. So this Friday, what I'm going to do is I'm going to go in. Let's see here. Right now, I own this long call right here, this 35.50, but it's going to expire at the end of the week, and most of the time it's going to expire worthless. It's already down to 3 cents. So I'm going to go in on Friday, and this 11 right here is going to say 7, right? It's going to have 7 days left. And so I'm going to go in on Friday when it says 7 days left. I'm going to go find a call in here that's worth about 5 or 6 cents. It would probably be the 37 call by looking at this here. It might be the 38 call. I don't pay 7 cents. I won't pay more than 6 cents. And I'll just go in and just buy one of these, this one here. But this will say 7 because it'll be Friday. And then this will say 0 because it'll be, at the expiration day of that one. Vivid collection. It's called communism. Welcome to the new Soviet Union. I mean, yeah, that's a valid point. David says, how do you avoid being tagged as a pattern day trader? So I only trade, I make one trade on Friday and one trade on Monday. So I don't get hit with any kind of pattern day trading. Sarkis, new here. Can you give a quick overview of the strategies you're using or any video I can watch to get to know them? Well, yes and no. I mean, I can't think off the top of my head, exactly every strategy, but I know in my YouTube channel somewhere in there. So basically, the strategies that I'm trading are these. I am trading the earnings edge, which you can find a video, just type in earnings edge on my channel. And I'm trading the PL5 Pro, and you can type in just PL5 Pro on my channel, and I'm sure there'll be a video on that. And then the PL5, which is really similar to the PL5 Pro. They're almost identical, but this is like a variant. And then of course the safe wheel, which you're watching me trade that right now. So just those four, those are what I'm trading. Those are my only four systems that I trade. And I have a couple other accounts besides this PL5 Pro and this PL5 where I'm trading the PL5 Pro and those other accounts. They're just not public accounts. I can't make all my money public because sometimes I might need to take money out. So yeah. Okay, let's see here. La World. Hey Carl, I've been trying to get an account with Interactive Brokers, but so far they don't let me get a level 2 options trading account due to some reason that they do not want to disclose. Well, you have to have a certain amount of experience to get that level. And so, I would go ahead and grab that experience. One way you can grab experience is just by learning a lot more. I have a free course available. If you get on my mailing list, or if you buy the safe wheel, or get the safe wheel for free, you'll get on my mailing list, and I'll also send you a free course with 16 modules, and it's basic options course. And I mean, if you know more, you're more qualified, and you don't have enough years under your belt for them to give that to you. But it's not really, in my opinion, about years. It's just about how much you know and you've learned about options trading. And I think that's probably why they're not giving you that level 2. So though I got an options account with a platform that is in my country, but not sure I can trade with it. Yeah, it just depends on what type of strategy you want to trade and whether they provide option margin. If they provide regular margin, you can probably trade options pretty, a couple of most of the systems that are out there. Not the PL5 or the PL5 Pro. For that, you need portfolio margin or span margin, which may not be available in your country because that's kind of a US thing, and I'm not sure. But if you can get Schwab and then use Thinkorswim, you might be able to get you should be able to get what you need. And Schwab's pretty much all over the world, so you might be able to get a Schwab account. Aiden, hi there, Carl. Just signed up to your course and found it and look forward to it. I'm new to trading, and I'm curious why options might be a good choice over other asset classes like Forex or crypto. So the reason why options are better is because there's an edge. There's an edge when you sell premium. So because options are overpriced, and why are they overpriced? Because they're leveraged and people use them for leverage. And so they buy them, and they're willing to overpay because there's some expectation. You don't know what's going to happen, right? And because that unknown, people are willing to pay more for leverage. And if you sell that leverage, you have a way to sell that leverage and remain hedged, you can take advantage of options because there's an edge. Now with Forex or crypto or stocks, there isn't necessarily any kind of edge there. I mean, the price of each of those underlying assets, the information comes in so fast that you can't really grab the information in time and then make a trade. And so that's all priced in. So there's really no edge that I found after 30 years with crypto, Forex, or stocks. Now, there probably is an edge if you want to buy and hold the S&P for a long period of time. You probably could find an edge doing that. But I'd rather make better returns with lower risk, and you can do that with options if you do it right. Or I can do it with options so far. And I teach other people how to do that. And I believe that anyone can do that because there is an edge. Flink and Tasty. Hi, Carl. I'm new here. Is there another stock to trade, or is JD still okay to start? JD looks fine to me. So there's some rules. If you have the rules, if you go ahead and get the free course, it'll give you the filters. I think there's about 6 filters that you use to go ahead and pick a stock. And JD looks good to me right now. Like even if you wanted to start new, that would be a good underlying. But get the course; it's free, and then go through the filters, and it'll tell you, what stocks fit into there. I have a list here, but not all these stocks fit into the filter anymore. They did when I put them in here. Palantir, for example, was between $20 and $40. Now it's 155. But yeah, and I used to trade DKNG, which I can no longer trade because it's above $40. And ASTS is above $40. I like to pick something that's around $30. So yeah, JD would be good. Oleg says, what time you're going to start teaching the wheel? Okay, yeah, I already did that. I was talking about the wheel. So after I got done with my hedges here, then I started running the traditional wheel. And because I'm long 100 shares, I look to write a covered call. If I didn't have any shares, I would sell a put. So I did talk about the wheel. So if you have any further questions about that, Oleg, let me know. James says, sorry for the confusion. Never long more than 200 shares, just keeping the put hedge at 2 until you add the second short. I see. Okay. So in other words, don't overspend on the hedge. Well, the thing I like about hedges is I believe that they should be proactive. So, and for simplicity, I like to get my total hedge on and everything there ready to go. So I don't have to try to hedge while the market's going down. So I'm going to overpay. So I probably would pay, well, it's possible I could pay less or more if I were to hold off and not buy that third contract till later. But one of the other things is, number one, I want to keep things as simple as possible, and that would complicate the system. And for me, that would complicate it for me, but also would complicate it for anyone else that was trading it. So I try to keep it simple. So just for that point of view, I wouldn't do that, only from simplicity's sake, because things got to be, you can't scale something that's complicated. And I'm not saying to scale the safe wheel, but I'm just saying in general, I keep my systems very simple because they need to be scalable. Ed says, if possible, can you vet AT&T real quick using the basic filters? Well, I can just kind of look at it. That would be T. I don't think T's in here. T might work. You want to make sure you can get enough premium. So if you're out of the money, so an out of the money put would be 28.50. So you want to get at least 28 cents out of the money, and being out of the money here, 28.50, you can only get 16 or 17 cents. So I wouldn't use this stock because it doesn't have enough premium available. You can see that the implied the volatility here is only 26. So typically this needs to be higher in order to make these premiums higher. It's got decent liquidity and everything, but it doesn't have enough premium to make the cut. So I'll just take it right out of there because I know I'll probably never trade AT&T because it just doesn't have the premium that I want to make it worth it. Everything's a percentage here. So everything is based on percents, and the percent of the premium is too low. It's not 1% of the price of the underlying. So that would be eliminated pretty quick. Okay. I don't see any other questions or comments. I do like to say in parting, always I like to say, if the P&L is not real, what else are they trying to conceal? I'll be back next week. I appreciate you guys.